Welcome. We're back here once again with Daniel Santiago, the Vice President of Strategic Engagements at Vantagepoint AI. Daniel, of course, with us for the rest of January, same time, same day, giving our audience a sneak peek into Vantagepoint AI trading software. Daniel, great to have you back again. How are you doing?
Hey, I'm doing good, Michael. Thanks for having me back. Always nice to talk with you guys. How are things going with you?
Really, really good, Daniel. Always a pleasure to have you on as well. We've really enjoyed the first two segments that we've done. Excited to dive into number three here. So let's get into it and get started right away. What are the differences between traditional lagging indicators and Vantagepoint's predictive leading indicators? Can you give us some insight there?
Yeah, absolutely. Absolutely. And you're going to love it. Let me start by talking about something that I talked about last time we met, the intermarket analysis. The big difference for the indicators that we're going to be talking about in the Vantage Point houses is how they're generated. The patented technology that brings together the information so that the indicators are leading indicators, not lagging indicators. And Michael, what I'm talking about is intermarket analysis. If you take a look at my screen real quick, you'll see the chart that I had up last time we talked with Southwest Airlines on the screen, where in the middle of this wheel, if you will, this graphic, you see we call a target market. This would be the stock that we're trying to analyze. This would be the stock or the asset, whether we're talking about futures, cryptocurrencies, forex, ETFs, regardless of the asset class. If it's in Vantage Point, Vantage Point finds the target market and then analyzes over 10,000 markets around the world, Michael. You know, there's a lot of markets out there, both domestically and internationally, to figure out what's really influencing the price of that asset. In this case, we're talking about Southwest Airlines. It looks at the open, the high, the low, the close, the volume, the open interest. It looks at all of that data. All those data points are crunched by the artificial intelligence using that intermarket analysis process. And the reason for this is because we know that markets drive markets. I used the analogy last time we talked about the iceberg, where we know that a tech stock on the NASDAQ could be pushed around by the movement of the NASDAQ itself. We know those relationships exist. In this case, we're looking at Southwest Airlines, and you can see there's other airlines on this list. You can see there's other markets that have a big influence, like light sweet crude oil, Caesars Entertainment. They have an influence on what Southwest Airlines could do from a price action standpoint. That's the engine. That's going on behind the scenes. That's the artificial intelligence that Mr. Mendelsohn created and released back in 1991. This technology has been available and traders have been using it for over 30 years. Well, today I want to spend some time talking about what that analysis, that intermarket analysis can really produce from an indicator standpoint. And I think that's one of the most important pieces about this, because we know that artificial intelligence has the ability to analyze data in a way that is humanly impossible, right? It can crunch data, mass amounts of data. It eats data for breakfast. And the great thing about it, artificial intelligence, the more data you push it, the more it learns. The more data that it processes, the stronger and the better it gets. So the fact that we've been using this artificial intelligence technology and it's been out since 91 tells you that over 30 years, the AI has been taking in this data, eating this data, reading this data, analyzing it, looking for nonlinear patterns within the data that are hidden. I'm not talking about just the surface level ones, because we know that those are there. It's finding those, but it's the hidden ones that are really the key. And in that analogy with the iceberg, the large part of the iceberg is below the surface. That's where this software excels. Well, from there, then now we get into how do you use that data? What are you looking at? How is it beneficial? Well, that's what I want to talk about today. I'm going to just change my screen really quickly and talk about indicators in general. For instance, this list of indicators that I like to call the usual suspects, Michael. You're probably familiar with this list. If you look at it, you've seen some indicators, you've used some of these indicators, if not all of them, right?
100%. Yep.
Yeah, most traders have. Whether you're a new trader, whether you're an experienced trader, these indicators are out there, they're available. People are using them day in and day out. Unfortunately, I call this guy Bob, right? We end up in the same situation as Bob, our hand on our head, scratching our head. Maybe it's the surrender cobra, because these indicators are trend following or lagging indicators, right? They follow the market. They tell you what has happened, not what's going to happen. And I don't care if you're looking at a day chart, end of day data, an hour chart, 4 hour chart, a tick chart. It's telling you what just happened. Now you try to infer from that what's expected to happen, but there's no predictability in those indicators. There's nothing in the formula that says, okay, here's some future data, some predictive data, and these indicators aren't enhanced with that data, and they aren't they aren't doing any global market analysis. If you go over to your platform, and I don't care what platform it is, you go into any charting platform and you bring up an asset like Southwest Airlines. We've been talking about that one. The chart on the screen, that's just Southwest Airlines, right? It's just showing you, you might have some moving averages on there. You might have MACD, you might have stochastic, you might have some of these indicators on there. But again, they're only analyzing Southwest Airlines by itself. And you know, and I know, and all the traders out there know we live in a global economy. Those indicators that we're talking about, that list of usual suspects, those indicators, they're ignoring the fact that the markets are global and they lag the market. So they've got two, what I call fundamental flaws. Well, we fixed one of those with the intermarket analysis. That's safe to say. The fact that the AI is crunching that data is happening, it's there. That problem is solved, in my opinion, with the AI. Well, how do we solve the fact that these are lagging indicators and they only follow the market? That's the second patent. And that's why I'm here today, because what we've done with this technology is we've created a way to use that intermarket analysis to create some predictive indicators. Let me show you what I mean. The first indicator I want to put up on the screen is what we call the predicted moving average. And it has predictive in the name for a reason. If you take the calculation of a simple moving average, and I've got it up on the screen, you take a 10-day simple, you add up 10 days of typical price, you divide by 10, that creates a line on your chart, right? That's a pretty simple moving average. A lot of people use it. Maybe use a 200 and a 500, excuse me, a 250. Maybe you use a 50 and a 20. There's a lot of different configurations. Maybe you're using an EMA to apply some more weight to the more recent past days. Well, no matter which calculation you're using, there is no predictive information in the formula. What we've done here at Vantagepoint is we've taken that intermarket analysis, we've crunched the data, right? We've looked at the data to figure out, the AI has figured out what's influencing the stock, and then it uses that data to predict not 1, but 2, 3 days. So it figures out the typical price for tomorrow, the next day, and the day after that, 3 days in the future. And then you recalculate that moving average using predictive information. And this is revolutionary. This is also patented, transforming lagging indicators into leading indicators. There's nobody in the world doing it like this. So what we've done then is we've transformed a simple moving average that lags the market, follows trends, into a predicted moving average that now leads the market and can predict trends. So this indicator that you see up on the screen, the predicted moving average, that's a trend predicting indicator. And when you look at it, you can see that there's a blue line that crosses a black line, and there's a red shaded area and a green shaded area. The key to this indicator is when that blue line crosses the black line. When the blue line crosses the black line, that's the AI saying that this trend is expected to change direction over the next few days. Now, regardless of what you're trading or how you're trading, if you can get a trend prediction that's highly accurate over the next 3 days, you can put yourself in a much more profitable position. And that's why this indicator is so key. It's not the only indicator we use, but it's the first indicator that we're going to look at because it's talking about the trend direction, the direction the trend could go over the next few days. Now, we didn't stop there. This is the first indicator we're talking about. But we also have an indicator, if you look at the screen right now, called a predicted a predicted neural index. When I say predicted neural index, what I'm saying is the neural index in Vantagepoint, the artificial intelligence has figured out from a strength standpoint whether that asset is expected to gain in strength or lose some strength. And it's represented with this green bar. When the bar is green, that's short-term strength over the next 2 days. When the bar is red, that's short-term weakness over the next 2 days. This is calculated on its own neural network. So what I'm saying is that this is a completely independent calculation from the predicted moving average. So you've got two calculations being generated by the AI looking at different pieces. One is looking at the trend direction, one is looking at the strength. Now, to take it a step further, let's talk about the next 3 indicators called the predictive differences. Now, Michael, you probably know a lot of traders that use momentum, MACD, RSI, things like that. Momentum indicators are valuable in trading, right?
It's a good part of our audience for sure.
Yeah, absolutely. Well, imagine that momentum is telling you what has happened from a momentum standpoint. Imagine if you can transform that and get predictive momentum based on that artificial intelligence process. That's what this indicator does. So the predictive differences, there's three of them in the software. There's a 1 day, a 2 day, and a 3 day. All right. The 1 day is telling you whether there's bearish momentum happening or bullish momentum happening in the next day. Right. Or the 2 day is telling you whether there is bullish momentum happening or bearish momentum happening in the next 2 days. And then the 3 day is kind of obvious. It's doing the same thing, but it can tell you whether that momentum is building or not and what direction it's building over the next 1, 2, or 3 days. So again, you get the opportunity to transform an indicator that is only based on past price to an indicator that is now doing global market analysis and predicting the momentum over the next 1, 2, or 3 days. If you line up these five indicators, you get a really good understanding of what's expected to happen, and you put the probability in your favor. We're talking about accuracy that's been proven to be up to 87.4% based on these indicators. Now we didn't stop there either, right? We took it a step further, and that's the important piece, is that if we can with the AI and we can get accuracy, we will usually. And that's where this next indicator comes from. It's a gray predictive candle. You see it out here to the right. There's just an example of it. What it's doing is it's telling you what Vantage Point expects the high to be and the low to be tomorrow. So the market closes, all of the data gets crunched. It's end of day data. Once that data gets crunched, these indicators are produced. This predicted high and predicted low can help with a lot of things. Entries, right? Exits, stop losses. Some of you might set targets. Some of the audience might set targets. Well, guess what? If you know how high that market could go tomorrow, that could help you with setting targets. So no matter how you slice it, the AI is crunching the data. It's able to predict the next day's typical price, and then it uses that information to take those tired lagging indicators and transform them into predictive indicators. And when those indicators agree, the key to this is that when you get that agreement, we call it total confirmation, Michael. And that total confirmation comes in the way of the artificial intelligence, all of these indicators calculated independently, but being on the same page and saying the same thing. I always like to use the analogy of a doctor or several doctors, right? The blue line being your primary care physician. You go to that doctor and that doctor says something might be wrong. You might need surgery, let's say. Well, you're not going to just go have surgery, right? You're not just going to jump in and have surgery. You're going to go see maybe a specialist, call that the neural index. And then maybe you go see another specialist or a surgeon, could be the predictive differences. Well, if all those doctors that went to school in different places, trained in different places, did their residency in different places, maybe have different specialties, if they all agree, it's safe to say you're probably having surgery, right, Michael?
Absolutely. Yep.
That's what I'm talking about here. If these indicators are calculated independently, but they agree, that can give you incredible confidence in what's expected to happen. And reading them is very, very simple on the chart. Let me actually, you know what? Let me show you. I'm gonna flip over on my screen really quickly just to give you a quick sense of this. We'll dive into this more next time we talk, but I just want to highlight these indicators in the actual software. I'm looking in the Vantage Point software now, and what I can see is candlesticks, all end of day data. This is light sweet crude, right? This is the updated data on light sweet crude as of the 6:30 download last night. And all I've got on there is a simple moving average. That's all I put on at this point, because I want you to see that as the price changes, that simple moving average will go from going up to then finally going down. It's safe to say, if we look at this, that simple moving average finally turns down after this big down day. Well, that's a little late if you ask me, but you do get a sense that that simple moving average is following price action. It finally breaks through those candles and gets above the candles right here where I put that line. This isn't a predictive indicator, folks. This is a lagging indicator. But if I take that predicted moving average and I layer it right on top of it, let me get this off the screen so you see what I mean. I layer it right on top of it. Here's that line I drew where we were confident that that simple moving average started going down. Here is where the predicted moving average started moving down. That's the difference. We're talking about, in this case, 5, 6 days. The predictions in the software go up to 3 days in advance, but it's a rolling 3 days. So every day you download the data, you get 3 more days. So what this is saying is that Vantage Point's artificial intelligence, when that blue line was above the black line and crossed below it, that's when Vantage Point's AI said that this trend is expected to reverse course. It's expected to change direction. Now, as a trader, that's valuable information no matter how you slice it. We haven't even looked at the predicted neural index yet. I'll show you that here momentarily, or the momentum. But you can already see how the predictive information in this chart can give you an advantage sometimes 3, 4 days in advance. The predictions go out 3 days, the calculations go out 3 days, but you could really get advanced notice of the trend by using this indicator. The next indicator that we talked about was the neural index. I'm going to put that on the screen, right? If I put the neural index up on the screen here, what we see is that green and red bar at the bottom. Call it doctor number 2, right? The blue line crossed below right here. The shaded area went from green to red. That helps you remove some of the emotion, by the way. When you see red, you think stop, right? Most of us drive cars and we know how stoplights work, right? So we made it to help remove some of that emotion. Well, once you see that, the first thing you do is you go down to the neural index and see if you get confirmation. If I draw a line, well, you can see my dotted line there, right down to that neural index on 11.3, the neural index was red. So now what we end up with is the predicted moving average saying that this trend is expected to change direction over the next few days, and the neural index on that day saying, yep, I've got weakness. What the neural index is doing, just so you know, it's taking the calculation, the average price for yesterday and the day before, and it's comparing it to today and tomorrow's predicted price. That's key because that tomorrow's predicted price isn't available anywhere else. Well, since this neural index is using it, now you get predictive strength. Again, when these agree, you get that confirmation. Then we go a step further. We go to that surgeon, right? We layer on that next level, if you will. And I like that analogy because I think we can all relate. But if we layer on that next level, we get the 3 lines at the bottom. And with those 3 lines at the bottom, what we end up with is the predictive momentum. When I say momentum, I mean if momentum is changing from bullish to bearish, well, momentum traders know that price action can go right along with it. That's how momentum works. If that momentum is changing from bearish to bullish, it can pull price action with it. Well, take a look at where this crossover was. I'm going to move this line now because I think you got the point. I'm just going to slide it over to where that crossover was clear. We've got the neural index in agreement. Look at what was going on with the momentum prior to that crossover. Momentum started leaving and turning from bullish to bearish way back here. Now, this trend was going up, price was going up, but you can see momentum making the shift right here from bullish momentum to bearish momentum. So when I got that crossover and my neural index agreed, I go take a look and see what the momentum was doing right into that day. And I can see all 3 predictive differences were pointing down. That means momentum is shifted from bullish momentum now to bearish momentum over the next 1, 2, and 3 days. So what I end up with is total confirmation. If I have total confirmation, I can be confident on what's expected to happen. The blue line crossed below, the neural index turned red, the predictive differences, all 3 of them were pointing down. I know what's expected to happen with up to 87.4% accuracy has been proven historically with this. Now, as this trend starts to slide lower, I'm either bearish this opportunity, I could be shorting it, right? I could be doing a lot of different things, buying puts. If you do options, a great opportunity was presented on 11.4 for light sweet crude oil. And whether we're talking bearish or whether we're talking bullish, the analysis is the same. I can see when that crossover happens right here, you can see that those momentum indicators and those predictive indicators all agreed. Follow my mouse right here on 12/16. That's the day I got total confirmation. And that's key. Michael, there's so many indicators out there that can create whipsaws and create over trading, create that churn. That's not what Vantage Point is about. When these indicators line up, some cross before others, some change colors before others, But when they line up and we end up with that total confirmation, we end up with a really good sense of what's expected to happen. Now, I don't know if anybody's taken a look at light sweet crude oil so far today, but check it out, right? You can see that crude oil has been on an incredible tear. A lot of profits, potential profits gained here in this one trend alone. And at 6:30 last night, going in today, you can look at this gray bar over here and see that Vantagepoint was expecting a lower day. The predicted high is lower than the previous day's high. The predicted low is lower than the previous day's low. So although this is an uptrend and that trend is expected to continue, it's telling me at 6:30 last night that light sweet crude oil is expected to settle from a price action today. And it could certainly be a down day. We know we have down days and uptrends. The fact that the predicted low is way down here would certainly represent a potential down day. Well, having that information means I'm prepared. I can make better decisions if I'm prepared. I can be more confident if I have the benefit of intermarket analysis, Michael. And these are the indicators. We'll spend some time in the future walking through the details of it. I just wanted to give everybody a good sense of how these indicators are calculated, how you can use these indicators to be more confident and make better trading decisions. Now, nothing is perfect, but just sit back and think. If you could get predictive information like this on a consistent basis, day in and day out for the next trading day or 2 days or 3 days, imagine what that could do for your potential results.
Absolutely. Well, it's not hard to imagine those kind of potential results. Daniel, great as always. So easy to follow, so clear. A lot of great information here. Folks, of course, make sure you go to vantagepointforecast.com to learn more about this. Daniel, always a pleasure having you with us. Thank you so much.
Thank you, Michael. I appreciate you having me.